These are fun, aren't they, these CryptoCons? So I didn't get a chance to practice much because I ended up crashing a crypto party last night on a rooftop. So we'll all get through this together. All right. So I'm from CoinJar. That's an exchange that's been around in Australia. It's the oldest exchange in Australia, and we've been around for a very long time. So what we've done with this talk is we've pulled stats off the exchange, and we've presented it to you. We're presenting it to you what our customers are doing, what they've done in previous history, and we're going to try and predict what they're going to do in the next few months. So we've won loads of awards. I won't go through them, but we're really cool. We've won loads of awards. And we're one of the top ranked crypto exchanges. Okay, so is this still working? Who are our customers, right? So the people who are mostly on our exchange are older millennials and Generation X. So a lot of people think that crypto is probably a young lad's game, like the crypto bros. It's actually really not. It's actually older millennials and Generation X. And also significant is older Generation X, 55 to 64. So there are young guys on there, so 25 to 34, they are on there, but they don't spend as much. So that's who our people are. And also in terms of our people who are on our exchange, the biggest industry we have on our exchange are tradies. So everyone thinks that like all tech guys, it would be tech guys on the exchange. It's actually tradies. And there's a few reasons why we think this is. And one of it is that at the moment, tradies are cashed up. If you've ever tried to get a tradie on the Gold Coast, you'll know how much they're charging and how hard they are to get to come to your house to do stuff for you. So they have a lot of disposable income, and also they do hard labour, and so they're looking for a way out of that by the time they're 50. So they're looking to invest extra funds on retiring early. So they're investing in their future. That's our main people. Okay. So what we've done here, we're going to discuss market cycles. And so because we've got a lot of stats over a long period of time, we can kind of predict what they can do, what they might do, depending on what they have done before. So there's a few things that really affect the statistics. One is the US elections. That has a really big effect on the crypto price, especially Bitcoin. And the other one is the Bitcoin halving, obviously. Okay. And also we have to say, of course, it's not financial advice. If you do what we suggest here and you lose everything, you can't sleep in my garage. This is all on you, all right? So this is not financial advice. Make your own decisions, do your own research, all right? So why are the US elections so important to Bitcoin price? Well, it's because when a government is in power, they don't want to lose that power. A president doesn't want to not be the president. So they do a lot of things to stimulate the economy in the year before the election. And we've seen this happening. So they're doing a lot of things to stimulate the economy. And people feel rich, and so they invest in risk assets. And that's been going on in the USA. So, and of course, everyone knows that Bitcoin halving does affect the price of Bitcoin. So we're going to discuss these calendar effects. Thanksgiving in the USA, is that a thing or is that not a thing? The Santa Claus Rally, is that a thing? Chinese New Year, is it a thing? Mid-January to the end of April, which is loosely tax season in the USA. There's a phenomenon called sell in May and go away. We're going to see if that's true. And also the Halloween effect. So crypto ghosting, maybe. So let's look at Thanksgiving first, because that's what's coming first in America. Right, so if you can see the purple bands, that's the period around the elections, and it also coincides the same year as the halvings, right? So we've looked at our statistics about what happens around Thanksgiving times, and I'll just preface that by saying that The reason why we look to USA so much is because their market is so big and so rich. We here in Australia are just plebs in the scheme of things. We are just a tiny cog in the wheel. So while we can pull our statistics off our exchange, it's a drop in the ocean compared to what the Americans are doing. So in terms of Thanksgiving, we're here to say it's kind of like a nothing burger. It's probably not true, that effect. We don't think it's a big deal. So we've taken data from the week around Thanksgiving, and over the course of time, it really only rises around just under 5%. It's not really worth it. It's not really worth to risk it at Thanksgiving. It's a bit of a nothing burger. But actually, the exception is we think in 2025, unusually, we think that there is going to be a 18.96% rise in Bitcoin price at Thanksgiving. But that's the one coming, like the one really close. No, sorry, take that back. 2025, so not this Thanksgiving. This Thanksgiving is a nothing burger. We think the next one, Thanksgiving 2025, could be a good one. It could be a good rise. But after that, you're on your own. Okay, next slide. The Santa Claus Rally. Now this has been famous in traditional stock markets for a really long time, the Santa Claus Rally. And does it apply to crypto markets? We're here to say that according to our statistics from our exchange, Santa Claus is real. Yay! So when you start hearing Mariah Carey sing her song, that's when you start really thinking about crypto, because the prices, we think, are going to be really good at that time. And traditionally over time, the Santa Claus Rally is really good for the Bitcoin price. So during the last 2 elections in the USA, which coincided with the Bitcoin halving, the price of Bitcoin did really, really well at Christmas, and I'll give you the stats. They rose by 37.7% overall from all years, and so we think this December is going to be really, really good. Again, not financial advice. If you lose everything, you can't sleep in my garage. But we think next December, 2025, so this Christmas we think Santa Claus Rally, yay, but we think next December, out. No, we don't think it's going to be a thing. Okay, next one. So another phenomenon in the traditional stock market is the last week of December, and that's when cryptocurrency prices, it's supposed to be a very small increase. So we tested that out with our statistics, and we also think that it's not great. Just ignore the last week of December. It's not going to be a thing, right? Okay. Our next one is early January. Now we're calling this period of time Santa's hangover. Traditionally, these 2 weeks are not really good. Christmas has been really expensive for people, so people aren't ploughing money into new crypto purchases, and they're going back to work. And also at the end of December, in America, people usually sell some stuff to reduce their profits and just to like escape some taxes. So this does, in our experience, make the prices go down. So it can be a bit stagnant at this time. So first 2 weeks of January, not a thing. The next urban legend we want to talk about is Chinese New Year. So during Chinese New Year, the legend has it that the crypto prices slightly go down during the week leading up to Chinese New Year, and then they rise again. And this is why they think that is. People have sold some of their crypto to buy money, to change it to cash, because they hand out cash in the red envelopes. And then when they're on the week's holiday, they're not very active. And then people give them money and they come back with money and they put it back into crypto. So then it goes up again. But this is a known effect, but it's not that strong in crypto according to our statistics. So we think post-election year, which is the best year, we think it'll go up around just under 20% around that time. in 2025, but in 2026, we think it's going to be a nothing burger, another nothing burger. So 2025, yes. 2026, no. Okay, the next effect is mid-January to the end of April. So this is a really interesting time in the scheme of things. We're calling this the golden hour of the calendar. So this is a really good time to lock in and know what you're doing. So we have worked out that our projection is that post-election and post-halving years, there's been an average return of 65% across 2 previous bull markets. Now this is where April gets a bit risky. Now if you're risk adverse, I'm very risk adverse. I'm a total scaredy cat. So I would say be very careful around the end of April. I am risk averse, so I'm out at April, but I think, yeah, this is an interesting time. There'd be a golden period before April, then after April, be very careful. The next phenomenon we're going to talk about is sell in May and go away. So this urban legend comes from stock market thinking, but from decades ago. And it's kind of always hung around as an idea, but we're convinced that it's actually retro thinking rather than current thinking, because we don't see that behavior in our customers that matches that behavior. It's not always the case to sell in May and go away. And what we mean by sell in May and go away is that a lot of Americans, they sell in May and they go on their summer holidays and they go outside and they touch grass and they do all those nice things. And so there's no activity. What we will say is that if there is a big correction in February or March, you don't need to sell in May and go away. You can hang on. But often there is a correction in June, so be careful. If there is a price rally between February to April with no corrections, then sell in May. If you are risk adverse in any way, sell in May. And also, tax time in many countries, USA, people pay their taxes in May. So they pay their taxes on investments in May. So that puts downward pressure on the price. Okay, next one. June to the end of August. So the June to August period after the elections, we think this will be the best 3 months in the post-election halving years. And that is if there's a little bit of a fall in May or June. So these June to August, that's the golden years. But we also think it's risky, so high risk, high reward. So just be careful here as well. October, the Halloween effect. So the Halloween effect is you don't want to get ghosted by profits at Halloween. In our opinion, it's risky. This is a really risky time of year. There could be really high reward for high risk, but it's a bit of a plank walk, so be careful. But if you're willing to take the risk, not financial advice, if you're willing to take the risk, we think there could be really high rewards here, but it is very risky. And this is when usually the bear market makes itself known, so be careful. Okay, so here's some more insights from our crypto exchange. So this shows our customer data since 2014. So we've got 10 years here. And it's kind of like what we're trying to explain here in a really simple format is that when we have an all-time high, right before it, there's more buying pressure than selling pressure. So when Bitcoin crossed a previous all-time high for the first time on the chart, there was a lot more buyers than sellers, obviously. And then when it hit an all-time high, then there was more sellers. So how does that relate to today? At the moment, we're at an all-time high for Bitcoin. So what are our customers doing? At the moment, our customers are selling Bitcoin. They're selling Bitcoin because they've finally reached profit after probably holding on for like 4 years or 2 years. They've reached the profit, they're selling, and institutional investors in America are buying. So what that means is retail customers, you and me, are selling, and big American institutions and market makers are buying. So while that's pushing the price up now, that will only be sustained if the retail buyers come back in and start buying again, because the institutional investors can't keep pushing the price up on their own. So this is a really interesting time. So we stopped drawing on this data a week ago, but in the meantime, the week that's leading up to this CryptoCon today, we've seen the retail buyers start to come back in. So what that means is we don't think that this all-time high is the highest it's going to go. We think it's going to go higher for a little bit longer because the retail investors are just coming back in now. So in the last week, we've seen a flood of new customers come in. So that's evidence we think that it's going to go back up. So hopefully they'll keep coming back. We love new customers. Right. So we also have this is the new people coming back in. So this is more evidence that we think that the retail buyers are back and it's going to go up again. And bonus indicator. This is really interesting as well. So another indicator that we have is that people who've held accounts for like 10 years with us or 5 years, whatever, they forget their password. They sort of want to reactivate their account. They see Bitcoin prices going up and so like, oh, I better go back into that account and find out what that's doing and maybe sell. So they ring us because they've forgotten their password or whatever. They're trying to get back into our account. So what we find is that once we cross the all-time high price, then the people trying to reactivate their accounts, they come back in at this time. And then we know that's the peak. And so for this cycle, so this all-time high we have at the moment, the people resetting their 2FA have not come in yet. So the people ringing us and going, I can't get back into my account, help me, they haven't come back in yet. So we think this is evidence that the all-time price, another piece of evidence that the all-time high price has not hit yet. Okay, that's all our evidence. Thank you very much.